Good afternoon, and thank you for joining the Future of Finance, Making the Insurance Journey More Comfortable. Thank you also to Trade and Invest Wales and Fintech Wales for sponsoring this discussion. I shall now pass you over to Dominic, Hobson and our panel. Thank you.
Hello everybody, I'm Dominic, Hobson, co-founder of Future of Finance, and welcome to How to Make the Insurance Journey More Comfortable, a webinar sponsored by Trade and Invest Wales in partnership with Fintech Wales. Now, more comfortable for who, you might ask? The answer, of course, is more comfortable for the customer, because increasingly it's the customer who is dictating the shape of the retail insurance industry. A long-standing maxim of insurance is that insurance has to be sold, but digital technology and digitized data mean that insurance now has to be bought as well. Not just because it's easy now for customers to switch provider, but because customers expect to be understood, they expect their cover to be personalized, and certainly they expect their experience of the sale, the renewal, and the claims process to be positive rather than negative. This is, by any standards, a very demanding environment in which to operate. And to help us learn how to thrive within it, we're joined by 6 people who are, in their different ways, reinventing how the insurance industry works. Emma Huntington is CEO of Admiral Pioneer, the arm of the Admiral Group that seeds, launches and scales new businesses as future growth areas for the company. David George is CEO at BikMo, an InsurTech and the biggest bike insurer in the UK, also operating now in Germany, Austria and Ireland. Their mission is to protect the world's cyclists. Sarah Williams-Gardner is CEO at Fintech Wales, the voice of fintech in Wales, which has in the last 2 years since it was set up, helped a variety of disruptive new entrants, digitizing incumbents and tech providers to launch and to grow. Nigel Lombard is CEO and founder of Peppercorn AI, which is using artificial intelligence to transform the application, cost and claim components of car insurance by using digital agents. Steve Jukes is COO at Confused.com, the original UK comparison site founded in Cardiff in 2002, and which has now expanded beyond motor, household and travel insurance into utilities and even car purchases and car finance. Now, in addition to our panelists, we of course have you, our audience, and all 6 of us encourage everybody watching or listening to submit questions and comments throughout this webinar by using the Q&A or the chat functionality at the bottom of your screens. I will not be saving your questions up to the end, but I will endeavour to get our panelists to answer them as we go along. We've got a large panel and lots to talk about, so let's begin. And I'd like to start really by asking David and Nigel to share with us their experiences of disrupting the existing retail insurance markets. And David, perhaps we start with you. And I ask that question because in one sense, it is easier than ever to switch your insurer. You know, customers are no longer loyal for life, but by the same token, you could argue that retail insurance is becoming commoditized. In other words, you could lose customers as easily as win them. How do you keep customers engaged, David?
Well, I guess, yeah, I mean, if your business model, as in most of insurance, is a retention-based model, it's really a subscription model, for want of a better word. So in addition to new customers, you should be really focusing on retention. That's the kind of key metric. If you pay to acquire a customer, you want to retain them as long as possible. And from our perspective, it's really about having that relentless focus on the consumer, not just traditionally with insurance. I think actually when we first started, the thing that we got told was sell the policy on day 1 and don't say a thing until month 11 or 12 when you want to renew. And that goes completely against what I think an insurance product should be. You should be adding value to every point sort of, throughout that first 12-month period. And that's what we try and do, be there for the customer, not just at the point of claim, or if they want to make an adjustment to the policy or renewal, but, throughout really adding and supporting them in riding more is what we do. I think Vitality is a great example of that, with 50% off a pair of running shoes or your Apple Watch. Each and every day you have an interaction with something that your insurance provider has enabled for you. And that's a really good example, I think, of how insurance of the future should be constructed.
Nigel, you're at a slightly earlier stage in the journey which David has undergone. What's your experience of trying to disrupt the existing market?
Yeah, so I'm in the process of starting something up, but I have started up and been involved in 2 InsurTechs prior to this, so I can talk with some of that in mind. So yeah, a bit like David explained, the new business acquisition part is only one thing, and I guess certainly in the world of car insurance, which I know is different to bikes, because bikes People actually want to insure them, they really care about them, and it's a hobby and it's a genuine interest. Car insurance is slightly different in that it's a bit of a grudge purchase. People don't really want to spend money on car insurance. In fact, it's a bit of a pain, but it's a legal requirement, of course. So therefore, customers don't tend to really want to be necessarily proactively engaged by their insurer on the whole. So it may be possible, but what I've seen is where customers need to interact, it needs to be convenient, it needs to be simple, it needs to be accessible and easy. And in a digital age, the way to allow that is obviously through multiple channels, and customers really like to be able to self-service. They don't really want to be hanging on to on a call center or even in a queue to chat to somebody, which is now the next version of the call center in some shapes and forms. So I think it is about, and obviously the claims experience and any complaints need to be handled very, very quickly, and with the minimum of inconvenience to a customer. So I don't think we can ever turn insurance into something that's enjoyable, is what I'm saying.
Steve and Emma, perhaps you first, Emma. You were, of course, challengers once. You, in some ways, helped to create the environment which David and Nigel are now exploiting. How much has the environment changed in the time you've been operating in the marketplace? Is this, the ease of changing? What's the balance between how that's been good for your business and how it's been bad for your business? And how do you meet the challenge which David issued, which is how to retain people, how to maintain the relationship over time? Emma, give us a few thoughts from your experience.
Yes, sure. I am new to Admiral, I have to tell you. So the amazing results that Admiral has announced today and the journey that Admiral's been on to get there, I am very much 1 year in. So don't take any credit for that whatsoever. But I have worked in insurance and financial services for some time, both in large insurers and in startups. So I think really what's really happening is the use of digital data and insight is allowing both insurers and InsurTechs to turn the processes from this is how we do insurance to you to this is how you live your life, and we will create an experience that fits with that. Now that's a very broad statement, but then within that you have very different types of insurance, very different types of need, very different levels of risk aversion. And I think what we're seeing is that there's a role for more players, whether they're coming out of the incumbent insurers or transformations within them or new startups, to serve needs of customers in ways that they were never able to do before because it wasn't economically viable to be able to do it. But now we can, and that's what we're seeing. So it's really, really exciting. Admiral, of course, is responding to that across the whole business. Then obviously price comparison. So from Steve's perspective and other related partnerships are also responding to this disruption as well.
Steve, you've just said Emma, say you're, as the original comparison site, you're responding to what's going on. How are you doing so?
Yeah, I think that's right. One point I would make is I think switching. So you talked about that becoming easier and more prevalent. I think if we talk about that as specifically customers regularly reviewing what it is they want, regularly reviewing what the offers are out there for them from a business they might not currently be a customer of in their current business. I think that's encouraging competition, encouraging innovation, because it gives new entrants more opportunity to shine. And so I think new entrants are probably very, very supportive of that, particularly in the early days. As a business, we think that gets more choice in front of customers and more competition for customers, which typically is a very good thing. So we play quite an active role in getting startup InsurTechs and other new providers or new brands to market. And it's something we're quite passionate about. Now, some of those products might have quite a niche appeal to begin with, but the only way you find that out is by helping them get to market and then letting customers choose and letting customers be served.
Can I, just before I let you go, Steve, as I'd like to bring Sarah in a minute, but how active actually are consumers in terms of searching aggressively for the best deals? As you look back over the life of the company, has consumer apathy ever been a problem?
I think consumers are pretty active. If you take car insurance as one example, the majority of new business policies come through a comparison experience at some point. Typically, customers will go to more than one service, more than one brand to help them search the market. I think often they need to be reminded. As the point was made earlier, customers can. It's not necessarily a process they look forward to, so customers can forget about it. So they need to be reminded it's coming up, and they need to be helped through it. So I think as we look to the future, all the different ways that we can make it easy for customers to sort these tasks out, but also to get access to the most choice possible, and in any environment that they happen to be in and they want to do it in, well, the more we can serve that, the better. But overall, I think once they're aware of the opportunities in front of them, then yes, they are quite active in not just finding the best price, but finding the right offer for them at the right price.
Now, Sarah, Emma mentioned what's probably the single most important aspect of this entire discussion, which is data, the completeness of your understanding of the individual customer, what life stage they're at, what life events they've experienced and what are coming up, when they were born, when they got married, how many children they have, what their wants and needs are, etc. I know that data is something you've taken an interest in. What's the, with your experience of the people you see from your position in the industry, who owns that data? Who owns the customer? How useful, how complete are the existing data sets? Is there work still to be done there?
Well, when it comes to data, obviously, you can actually have too much of it, I would suggest. But we often say you can drown in data, where actually what we want to do is surf on the insights. What we want to do is we want to take the insights out of the data. We want to take that back to the consumer. My background has been in digital banking over the last 5 years. And what we felt was that the owner of the data, the owner of their banking data, should be the customer. And what we did was we put the power of that in the palm of their hand. So allowing them to interact with their financial data on a very, very regular basis. People were doing that every half an hour. It reduces the anxiety. It keeps you on top of your banking and your finances. Moving into insurance, and I don't have the experience of insurance that the rest of the panel do, but as a consumer of insurance, and everybody said it already, it's not something that we look forward to. It's car insurance is something we have to have. It's a legal requirement. And I liken it back to the days when I worked with DVLA. You have to have a tax disc. But we made that journey as part of the team in taking that into a digital journey. We made it more enjoyable. And I think that's what we've got the opportunity to do here, is to work out who owns the data. And I think that's going to be a really interesting point. My perspective is the consumer should always own their own data. But as we go to electric vehicles, as we change the products that are being offered in this market, there will be a question about who owns that data. But I think for me, the power here is it's really understanding what pieces of that information can deliver value back to the consumer.
Before we pick up that point, I'd just like to welcome Dr. Harry Behrens. He's head of the Daimler Mobility Blockchain Factory, part of the Daimler Mobility subsidiary that uses AI, data analytics and blockchain to digitize the leasing and financing business of the company, as well as the machines, i.e. the cars and other devices which you make. And Harry, I think I'm right to say your speciality is applying blockchain to shared car insurance, but welcome to the panel. You've arrived at a rather apposite moment, which is where we started to talk about data. But I'd like, before bringing you in on this subject, so join us in a sec, but I'd like to ask David first, because Sarah said something very interesting there, which is that the consumer must always own the data. So let's imagine we're in a world where, even by law or by regulation, the consumer owns the data. What impact do you think that would have on your business? Would it be better if this was an entirely distributed thing? In other words, you said, I need to know this about this customer, and you went and fetched it from multiple sources? Or would you like some central intermediary to the customer to appoint somebody to be custodian of their data and then access it through that custodian? Which would work better for you?
Well, I guess I think data ownership is a really important side of things, and I think customer ownership is a bit of a fallacy because it's really about a relationship that you manage, and you have to maintain that relationship. And if you don't maintain it, the customer will move on from your product. And I think data is so intrinsically tied to that. Now, even with our own systems, actually segmenting customer data such that at a click of a button they could withdraw that, which I think from a consumer perspective they could will be quite complex. But I think if you ignore the fact that the customer is going to own the data now and don't start to think about building your systems that is going to happen, then I think you're kind of falling behind. I think with regards to, I think from an implementation point of view, from an insurance provider, a single source of data would be incredible. Whether or not there will actually be, a single format, a single provider or service, that can enable, their data to be shared to buy a policy and then to withdraw it at the point they don't want to share it anymore. That's a huge topic, and perhaps blockchain might be a technology that it's suitable for. I'm less familiar with it, but I'm kind of intrigued as to how that would happen. But I do think it is going to be I think it's inevitable that's going to happen at some point in the next, 10 to 15 years or so.
Mm-hmm. Nigel, I'd like you to chip in on this question of use of customer data. But before you do, perhaps Harry, you could give us some thoughts on how data can be used both in your business, but how well you think insurers are adapting to the fact that there is all this data available, but also that the behavior of consumers is changing. They're starting to share their cars rather than buy them, for example, and they're happy to insure it for one journey rather than for the whole year. I'd be interested to know what your thoughts are on those changing social behavior, as well as the application of blockchain to these data sets.
Yes, so the change in social behavior seems to be fairly clear. And we see this on the individual level, and we see it on the political level. And we also see it on the technological level, where something that's essentially quite boringly called decentralized identifiers have now been branded self-sovereign identities. So the trend is very much that because of what has been perceived as excess of data absorption by huge platform operators, there is a very strong trend to know the individual needs to be in control, needs to be sovereign of their data, and that genie is out of the bottle. So I would doubt that it is desirable from a society's perspective or from the policy perspective to have that single source of all data where conveniently everybody can go and feed themselves. This is, in the current mindset, probably not communicable anymore. That's just my analysis of what I see as a social trend, which plays out on the policy level, it plays out on the individual level, and it very much plays out on the technical level. Now, with regards to insurance, and I am not the expert on insurance, I am the expert on how to build and design pay-per-use transactions around the vehicle, around mobility, in a ways that, and this is where blockchain comes in, all data is golden. In the sense that is basically when you look at what blockchain gives you, and by the way, also digital identities give you, they give you this data, which is the trust story, which is the consensus and the cryptography that's being applied here. But in a nutshell, it means you know this data is for real. It doesn't have any fuzziness in it anymore. And if you marry that to the concept of pay-per-use, where you rent the car on individual transactions, but you have exact, when did the transaction begin? When did it end? How much repair was associated with it? What was the cost of it? How much was paid? And you have then this potential profile, both on the vehicle side, which is generally speaking where the damage would accrue, but also on the customer side, where you might have drivers, especially in countries where freelance driving is very common, that want to build a history of driving safely and therefore basically being more competitive in a very competitive job market. So you would have this accrual of data which can be made profitable for each and every involved party. So the secret to this is, yes, in order to evolve towards business models that can survive pay-per-use in generally, because it's a more efficient allocation of resources, always results in lower margins. If you think it through, that's almost inevitable. So if you go into such a business model, you somehow need to be much more efficient. And you can be much more efficient through efficient utilization of data, but you need to convince your customer. So it's all about the incentive designs. Do you manage to incentivize your customer out of their own interest to basically provide data so they get a certificate of I am a safe driver over more than 500,000 kilometers. So when I apply for a job as a driver, compared to somebody who's only got 10,000 kilometers safe driven in his secure credential, then I tend to get the job. In this case, obviously, I'm interested in this data to accrue. And I will help everybody that helps me prove that's the fact. Or when it comes to insurance then, and somehow I need to pay the insurance for the car rental, obviously I would be interested in paying less if in any way possible, if I have a history that proves I am a less risky customer. So you need to incentivize it, otherwise it's going to backfire. The old school of, no, we grab the data and we keep it, I think those days are over, and frankly said, I hope those days are over.
If you don't mind me jumping in there, Dominic, just to build on something Harry said, we talk a lot about giving customers more control over their data, which is great and is right. And I think it's shining a light on the fact we've got to get the value exchange right for the customer to encourage them to share and give access to their data where it makes sense for them. So there's a few areas, and maybe telematics is one of them, where the potential to create some very, very, very smart products for the customer is there. But you have to accept that today, telematics is still a relatively small part of the overall market, though its potential is huge. So what's missing, and in some cases, I think you could argue the value exchange isn't clear enough for the customer, or isn't strong enough in some cases, to motivate them to do so. So certainly it's a question of ownership, it's a question of control, but also it's about getting the value exchange right and then being able to communicate it clearly too.
Now, Nigel, I'd be interested in your perspective on this. You've heard Harry talk about establishing the identity of the customer, which is important for everybody on this panel, about this kind of evolving insurance personality you have through your history of your driving. You want to build up a record either for your work or to cut your premiums or whatever. You've got to understand the transaction time scale. Now, the digital agents you're building, Nigel, are presumably going to need to eat a lot of data. So is part of your business plan here to be able to start predicting customer behavior, to start personalizing the insurance offers you make to people? And
yes is the short answer. There's a few things in here. So first of all, with a dynamic conversational interface for customers rather than the standard boring old online forms that nobody reads, having a genuinely dynamic and personalized experience, which is automated, is definitely the way to go. And by doing that, you can, by definition, you can have a more flexible way of conversing, and therefore also offer more flexible and tailored products, which is indeed what the Peppercorn remit is. Just in terms of the broader sort of data questions that we've been talking about, it's clear and I think pretty unambiguous that who owns the data is absolutely the customer. There's no doubt about that, and maybe blockchain is the answer. Alternatively, it may be the equivalent for insurance of open banking. Maybe open banking should really just be open finance, which opens up everything, all data, all financial related data perhaps, and maybe there's levels of permissions within that. I think part of the challenge, there's a couple of challenges in here. One, how can we reach a level of standardization, which is incredibly challenging. Telematics data in itself, having set up and sold a telematics business myself, everybody captures telematics data in a different way. Some people are at multiple captures of information per second. Other people are aggregating it up to 1 minute intervals and all kinds of different levels, never mind the size of the data. And there are technical ways of overcoming some of these things, but standardization of this information and access to it is going to be key. Needless to say that Yeah, we are maxing, in terms of Peppercorn specifically, we are maxing out on all of the possible data that we can utilize in order to try and give personalized experiences, even to the point over time of different language to different people and almost different personas, to optimize the experience to make it easier for customers to understand what is essentially a very complicated, arguably in some cases needlessly, but a very complicated product with lots of caveats to it, and try and cut through what is essentially a daunting purchase for some people, particularly vulnerable customers as well.
Now, I'd be interested in your experience of, I mean, customer behavior isn't that easy to predict at the most basic level. You've got people coming in, through your website, through your digital agents eventually, you've got them coming by email, through brokers, through agents, through, I don't know, call centers even, and even by snail mail, presumably. So you've got multiple distribution channels. And I imagine, David and Steve have versions of this problem as well. And if you're looking to personalize the experience of a customer through that journey, actually, how difficult is it to somebody who comes in by snail mail or email, and then you start dealing with them on the phone, and then you start dealing with them through a web-based digital agent? I mean, how difficult is it to sustain the understanding of the customer across these multiple channels?
It's a really good question, and a lot of the challenges are really down to legacy systems, which are very challenging, particularly because as soon as you've launched something, you've already got a legacy system. And the way that that we're solving it with Peppercorn is actually building a single conversational hub, which allows that to be reused across digital channels. So no inbound call centers per se. Yes, we'll still have to accept email, but even the emails using AI and interpreters, we can actually understand the intent of emails as well to build that in. So there's a level of automation there. So it is possible technically, but it becomes harder the more channels that you've got. But if you're digital by design, from the get-go, which is what I believe we're doing with Peppercorn, then I think it is absolutely possible, but that is limiting it deliberately to digital channels of customer choice, because I believe customers really, really want as much self-service and to be in control themselves.
Emma, I don't know whether you think you suffer from legacy systems. I don't know how fast the system becomes legacy in the insurance industry. I know in fast-moving consumer goods, you're talking like 12, 18 months. Sometimes you're having to overhaul your service all the time. Yeah. How big a challenge is that for you to support people who are on the phone, people who are on the email, people who are on the website?
So yes, legacy is a big challenge for all incumbents in financial services, and insurance is no different. Almost a victim of our own success in that we typically built, we're ahead of the game in building sophisticated technology, which is now legacy. And typically most organizations built around product, not customer. That's the traditional way that financial services has always worked. And so now, of course, we're all saying, well, of course, you don't build in product silos, you build with a 360 degree of your customer, and actually through APIs and integration layers, you can connect not only all your own data, but also third-party data, of course, with consent, etc. And that's exactly the model that we're all striving for. So I'm relatively lucky because, of course, I start with Admiral Pioneer, which is, greenfield startup businesses. So we get the benefits of Admiral, but we also can start with our own new technology, and we're doing exactly what Nigel has described, and we will also do that across non-digital channels anyway. So we will be able to see a view of our customer across all interactions, whether that's on the phone, digital, further up the value chain if they're interacting with our partners. And we're going to build that from scratch. Much more complex and expensive and time consuming to do that as an incumbent insurer. And of course, although we marvel at what we have today, within a short time, we will also have legacy, and it's inescapable. So I guess the key with the technology community and the business community these days is to make sure that you're constantly trying to reduce technical debt. And that's a huge priority for us, as it will be for everyone on this call. But that's the aim, and that just gives you so much more scope to be customer centric, so much more than we were able to do in the past.
Now, Sarah, I bet you have some experience of exactly this issue, right?
Yeah, well, you know, having been a founder of a challenger bank, we realised it was too difficult to rebuild, so we started from scratch, and we had that luxury. But one of the things that we realised, and we've heard it said here, is our systems were legacy the day that they went into production. That was within hours. It was not unusual, and this will most probably surprise people because of the way that we built it, and it was both based on PSD2, which is now referred to as open banking, and I believe we're going to go into open finance, and I think this is where insurance will come on board, and that absolutely has to be consent from the consumer that they want to share their information. But we were rebuilding those systems on a daily basis. There were new releases going out daily. Actually, some of the constraints were the fact that Apple on the App Store only allow you to update sort of every so many hours. But the most important thing for us was not to become legacy, and therefore we had to keep on top of things all of the time. So that will surprise people. But moving forward into this, it is about open finance. We've seen a huge progression in the financial services around banking, around the current account. There's so much more that we can do. We can link the insurance products through open marketplaces. There's a huge amount of collaboration here from a consumer perspective, which comes back to where, you know, I was in my previous life, which is putting the power in the palm of the consumer's hand to actually manage their money in the way that they want to. And, you know, I was really intrigued to hear what Nigel was saying about telematics. I don't profess to be an expert in telematics, but in a back life, I worked for IBM, and we had telematics out 20 years ago, and it was possibly too early. And I think that's the other thing that we've got to bear in mind here. And I think, you know, not that I want to talk about COVID and the pandemic, but one of the things that it has absolutely driven us to do is to accept digitization. You know, we more people are communicating, not that it's our preferred way of communicating, but we're communicating in this style. We're doing Zooms, we're doing FaceTimes, more with family, with friends. But that digital adoption has just leapt forward. A shocking stat, but in the first month of lockdown last year, can you believe we've been in this over a year? Last year, there were 6 million UK adults that downloaded for the very first time, that's 12% of the UK population, a digital banking app. Now they're going to be banking in that way, and they're not going to go back. We've got behavioural change here. So this is a market that really needs to put the consumer, as everybody is saying here, and as every business on this call will do, is put the consumer forefront of what they do to deliver the service. But as a consumer, and whether it's telematics or not, I mean, you know, I have a smartphone. I use a calendar. My phone can tell me how long it's going to take me to get home. It knows where I'm going. And so that proactive involvement for me and the whole mobility side, when, you know, my next purchase hopefully will be an electric vehicle, it'll be able to tell me, you know, will I purchase it myself? Will it be shared ownership? Will I be told what's the best time to drive? What's the most efficient time to drive? I'm looking forward to all of that, but it does need the standards. These are not easy things to do. It most probably needs distributed blockchain for that identity piece as well. But standards are absolutely critical. And what you see in financial data is PSD2 and open banking. And as we move forward, open finance and the standards around it will be absolutely critical.
Sarah, I think your point around going digital ties back to the original question really neatly, which is around personalization. So we've seen that shift to digital accelerate, but how do we keep the human element in those digital experiences? Because I think that is so key. Digital is one thing, but to keep that sense of that human experience in it is really important. And I think personalization has a strong role to play there. We talk about the kind of basics of personalization. It would be greet me, show me you know me, demonstrate that you recognize our history together, and then you're into the more advanced things like make me competent and so on. And actually, can you say you can do that across every channel? For many businesses, that's a challenge, and it requires a big investment in data architecture and other platforms. So it can seem expensive, but I think it's a lot more expensive not to invest in those things.
Just to add into that, I think we are living in a time now where sort of, I guess, data warehousing, the integration layers where you can combine a number of different data sources are becoming more affordable. It's not just sort of for the preserve of the huge companies there. And I want to give a shout out to the Data Innovation Accelerator at Cardiff Uni that have been introduced by the Development Bank of Wales, who we're working with for our business intelligence platform, doing fantastic work, flattening out lots of different data sources and helping us sort of combine it again to get that single customer view, so we can get an understanding. And it's really to improve I think the journey so we can learn more about the customer. The one thing I would add is that I think someone talked about having too much data, and I think from an insurance perspective, you don't want to personalize every single policy to the nth degree, because then you're just going to be very selective in who you're insuring. And I think there's a moral responsibility as an insurer to be able to cover the masses. The business model works for the the policy, the premiums of the many playing the claims of the few. And I think the more that you sort of segment that too much, you kind of move away from that model, which, that will be challenging.
Right, so there's a balance to be struck between being customer-centric and being product-driven, right? Sarah, you wanted to say something?
No, I was just going to come off the back of what David was saying about the data accelerator, and I think this is really important, and we're seeing this across the country. There's a phenomenal exercise going on with Edinburgh University on bank and finance data, and then what we're seeing with Cardiff is this digital data set, which is very much looking to combine many forms of data sources such that we can actually test products more easily. We can get access to wider data sets. It was one of the things that we heard or we read in the Khalifa review. The Khalifa review has recently come out last week, looking at the fintech and the financial services, and obviously InsurTech and insurance is very much in there. And one of the things they've been talking about is how do you scale? We've had sandboxes, we've had access to some data, but how do you scale? And I think, these types of data initiatives, merging with academia, working with people in innovation, R&D labs, and making access to more people. So data isn't the commodity of the established, the incumbent, the very deep pocketed organizations, but it is much more ubiquitously available for all to be able to test their products for the single purpose of serving the consumer better.
I think I'm approaching this from a fairly technical point of view. So my background lies in technology, implementing the systems. And I believe, I hear a lot about data here. I posit it a little bit more radical than it probably is. But ultimately, I'm not a specialist on insurance, but ultimately I have this view that insurance, they have fairly big amounts of data. They run a lot of very sophisticated statistics on them. And based on the very sophisticated statistics, they can offer basically risk-based payouts in case of damage, very simply put. But you have already mentioned open banking and open finance, and I can tell you that open mobility is coming as well. So what that means is nobody of us is going to be able to hold on to that data and own that data. And if you think about the fact that not only is it now the customer is fully in control of the data, it's much, much worse for those who built their business model based on data they own, because there's a right to forget. And this right to forget is a killer in the implementation. And it's a killer in what it does to your data, because I can pull my data out of your data pool. You have to, provably, first of all, it makes it very expensive for you, but my data needs to vanish, and all the cross-links, and actually, strictly speaking, and some lawyers are going to get rich on this, and some PhDs are going to be written, I could reasonably posit that whatever learning algorithm you did on a certain amount of personal data might have to be rerun after a certain aspect in order to reflect that my data should not be part of that learning algorithm anymore. So what this is coming to is the data will be outside of all of our silos. The data will be held. There's a very radical approach, which that is probably more radical than we can all digest right now. But you see it in finance, where there's something called decentralized finance now, which has completely gone autonomous in terms of what it does. But what it is the data is truly within the control of users, which is in the control of software that users put it to use for, and it will stay that way. So if you're an insurance company and you are good at statistics, or you are good at slicing and dicing or refinancing yourself, if I would predict this from a technical point of view, you would find a layer where your depth is going to shrink rapidly. You're not going to hold the data anymore. You're going to be getting the data through smart incentivization, through smart contracts whatsoever, from a world out there where there's decentralized data protocols, whatever you want to have. You will be able to access them, you will pay for them, and you will incentivize in order to receive them, but you will never own them and keep them. You can then enrich them as they flow through your value chain. And hopefully you enrich smart enough so that ultimately you can offer a product that pays you more than you paid to receive that data. But from a technical point of view, if you look at the technological trend that are happening here, that are unfolding on the self-sovereign identity parts, on the decentralized finance part, on the blockchain part, it is a radical change. It's not an evolutionary change. And I believe this has not been fully realized yet. And one thing that life has taught me over the last 3 years, we all think, oh, this is coming in 10 years. And this is probably what I would say now, not tomorrow. But whenever I've made these predictions to myself in the past, time is faster, not slower, than even my relatively optimistic projections, where I believe it's not 50 years, it's in 5 years, and then things come in 2 years. So all of this disruption is coming very, very, very soon. And anybody, we already see that in China, Alibaba offers by far the best credit scoring in the world. They have never, ever basically built it the traditional way, but their credit scoring is so good that the Chinese regulation system had to force them out of the lending business because they were simply rolling over the banks who could put nothing against it in terms of credit scoring, because the individual silos upon which they are basing the credit score was nothing compared to the truly big data, very big data approach that Alibaba was doing. And that will also unfold in a decentralized manner. Nobody in their own silo will be able to compete in terms of data depth to what is going to be free and decentralized out there.
Nigel, I'm sure you've got lots of things to say about this, but the two things from what Harry was saying that strike me as very significant is if your AIs are dependent upon doing computational statistics on readily accessible data sets, and those data sets become less accessible, in other words, you have to find another way of getting this information, as he says, by incentivizing people to give it to you, paying for it, in other words, or possibly by accessing proxies for it through a data net which accesses types of person, and you try to fit your customers into those types. But the other thing he said, which is very interesting, I thought, was how Alibaba has improved risk selection in bank lending. The same opportunity must exist in insurance. We heard David say he feels he's got a social responsibility actually to offer a broad range of customers a product, but not all competitors will be as socially minded as that.
Yeah, definitely.
Less risks.
A number of things to say there. So really interesting to hear sort of Harry's view, and I agree with a lot of it. There's one area I'm challenged to agree with. So I really love the idea and really would welcome the idea of using blockchain to transport data in between different financial institutions for different products and the like, as need be, in a safe and very, very secure manner, and all of the relevant data, or open finance, whichever way it's going to be solved. I think what I would challenge, though, and it will be an interesting test case if and when it comes, is algorithms that have been built, or machine learning algorithms that have been built and established as a result of lots of personal data being thrown into what is ultimately a very anonymized solution. And indeed, if you look at the way insurance and even lending scores and things like that all work, they're based on historical information, which is analyzed, whether it's machine learning or AI, etc., or just through pure manual data science almost. That's a predictor of future risk, therefore. So I think to be able to undo with the right to forget, to be able to undo and therefore have to rerun those algorithms, I would strongly suggest that would be a big challenge for the insurance industry and other industries to be able to undo that, particularly after it's been anonymized and considered and used. I'm not saying it's going to be impossible, but that would be a massive, massive challenge and would actually undo quite a lot of the way that the insurance industry prices, which is based on historic information. So the broader point of data at the moment, and I'm sure the same is true in many other financial services, you actually have to pay to access data about a customer to what we call to do enrichment. So every time a quote is gotten, be it on Confused or etc., whenever a quote is gotten for a car insurance product and many other lines of business as well, then a lot of external data is also brought in and added, enriched, if you will, in order to get a greater data set of enriched data. And that typically, even though it's ultimately should really be owned by the customer, whether it is or isn't is a different matter at that point, but we have to pay to access that information from a handful of relatively small number of suppliers to get that. So the model needs to extend to providers such as LexisNexis, Experian, etc., people like that as well, because it could ride a coach and horses through some of their business models. And I imagine there'd be massive challenges and pushback from those areas as well.
Would that be a terrible thing for you? Let's imagine the customer owned the data and decided to sell it to you. This might be better for you.
No, I think there's many positives to the consent part of it, providing all of the right data is there. And I think back to my original challenge, it's one of standardization and having the right data available at the right time. I'm not against Experian or LexisNexis for a second or what they do, because they provide a very, very valuable service today in the absence of anything else. So I do welcome, Harry's view of the world. I do welcome that coming and the ability, with the permission of the customer, to be able to access all of the relevant information in a timely manner. And I think it would also very much help consumers be able to migrate more readily between different providers of different services.
I think that as well as completely agreeing and deferring to your better knowledge on this element of data in our products, I think we also have to remember how Alibaba and Tencent, for that matter, started. And they didn't start there. They started with e-commerce and social platforms. And so I think distribution is also critical here. And the right to be able to use the data and in what form is absolutely valid. But how do you actually get to those customers in the first place? And I think that we are going to see more of a shift in you don't find insurance, insurance finds you, because further up in that value chain, in an area of something that people do potentially find more engaging, whether that's their social and e-commerce platforms or whether it's buying a car or a holiday or a home, there's going to be a lot of embedded insurance armed with the sorts of data and more that we're talking about, ready to be part of that journey. And so, of course, and I'm sure Steve has really strong views on and knows about kind of brand and how that plays out at the front end. But I think context is going to be is important, and it's going to be even more important. So it's not just about the brand, it's going to be about the brand in context. And that's a big area of disruption, as well as the products that we serve to people.
Did you see actually, it was just yesterday, it was announced, Google are going to stop serving ads based on your searching your web browsing history, but it's going to be predicted. So obviously they're not doing it out of the goodness of their own hearts. They obviously know this is coming, and they obviously have probably a better model predict what you're going to respond to and click through on. So it's here now, really, that sort of approach.
Mm-hmm. Can I, while we have your attention, David, can I ask you a question? I put this to Nigel. He didn't get around to answering it, I didn't think, but it was a point which Harry raised, which is that the 10-cent Alipay being able to make better credit selections than banks, and that being an issue in insurance as well, because you might well want to reduce your claim ratio over time by making better risk selections. Do you know what the experience of the disruptors in the insurance industry has been in terms of their loss ratios relative to the incumbents? Do you guys like you have a better track record than?
Well, it's a good, and it's kind of key data that very few sort of insurers actually publish. We did actually release some open data recently. We like to sort of show some of the stats around our claims, and I think that's really useful from a loss ratio perspective. It's tricky, and I don't mind sharing, not in exact detail. In the first couple of years of our policy, it was loss making, and we realized that was for a myriad of different reasons, because we weren't managing the whole end-to-end chain, and someone was making a decision on a claim that didn't understand the context of the claim, so they were overpaying. So the level of expertise we can provide automatically sometimes, and sometimes with human intervention, is quite important. So over time, we've massively improved that. I think the one thing InsurTechs, we're speaking broadly about InsurTechs. Some are like a tiny piece of technology that slots into the value chain. Some are actually a brand, a sort of end-to-end brand. Some have an insurance license. So there's a broad range. But largely speaking, we should be able to be more efficient when we're talking about expense ratios than an incumbent. We don't have to have a London office. We don't have all these legacy systems that need to be maintained. So in theory, you should be. I think probably one of the best examples to look at is Lemonade, who are very open about their claims data, and they got a big chunk of the US renters market and home market, and they have launched in Europe. But if you looked at their first 1, 2, 3 years, was significantly loss making. Now they raise an insane amount of money to cover that, and over time they have used their systems. They have an AI bot that can help sort of reduce their overheads. It can speed up claims for customers. I think that's not the key thing for me. I think it's about dealing with volume more efficiently. So I think in short, to start with, no, because you don't have the experience and the history. I think longer term, absolutely yes, you should be able to be more efficient, have lower overhead, which means you should be able to give more value back to the customer, be more price sensitive than an incumbent. Yeah.
Now, getting the expense ratio under control is very important. I've never forgotten the statistic when I was briefly involved with the insurance industry myself, that actually the average payout was 40% of the amount you thought you were insured for. Most of the rest of it disappeared in a mixture of process inefficiencies and, of course, a great deal of fraud
yes.
as well. Now, Steve, is this, in terms of selecting the insurers which you're making available through your website, is that the sort of data you look at? Are you looking at expense ratios, loss ratios, or is it really whoever wants to be on the site can be on the site provided they meet certain criteria? How selective are you being? How much data are you looking at in deciding who you can put forward?
And we do a fair bit of scrutiny into the businesses themselves to make sure that they can fulfill their obligations to a customer. So yeah, our due diligence process exists before someone arrives onto our panel, and then it's something we monitor very closely, particularly for the newer brands. We like to see new brands and new propositions come to market, so we want to help that happen, and we think that's important for customers and for competition, full stop. But yeah, we absolutely have to. We can't let everyone come on board, and we have to do our own DD to make sure people are going to be well treated when they take out a product, and obviously if they have an issue and they need to claim.
Now we're actually into our last 5 minutes, and I don't know about you guys on the panel, but the theme I'm taking away from this is actually the central importance of data to the evolution of the industry in the near term and indeed the long term. And there's a radical view and there's a more conservative view, and there's various points in between. I thought we might just wrap up really by just asking, I could ask each of you to give us your perspective on where you think data is going to take this industry. How's it going to change it in the near and medium term? Sarah, you brought up data first. What's your prediction for how data is going to reshape the industry?
I'm not sure it's my prediction. It's most probably my wish. And my wish is that as a consumer, whether I go for shared ownership, whether I go down the electric vehicle route, that this helps me around my life. It's not something I have to go and do. It's done with me, and it's done around the way that I'm living. It's sympathetic to the way that I'm living, and it's sympathetic to other things in my life. So for me, it would be about how this blends into my overall life, rather than my insurance being something I go off and do.
Right, so that's being customer centric. Emma, what have you got in the locker at Admiral Pioneer, which will give us an indication of what the future is going to be like?
I completely agree with Sarah, and I think that data combined with insight, because we mustn't forget that data doesn't tell you everything, tells you a lot, but you really need to understand your customers and who you want to serve. So I think data gives much better granularity around needs, behaviours, and used in the right way, as Sarah said, can be really powerful. Combined with insight, we love sitting in people's lounge rooms and understanding how they live their lives. Haven't been able to do it in the last year. That's not a good thing. So going forward, you understand your customers, understand what their needs, how they're going to use your services and products, and combine that with data. And I think that is the future.
David, what's your wish or prediction?
I agree with the rest of the panel. I think it's going to be ever increasingly important. I think the most interesting thing for me is actually what it's going to enable for the end consumer. If you look kind of behind it all, insurance is there protection against financial loss in the future, but protection is also there that enables people to go and do more stuff. And in the context of what we do, that's currently biking. That longer term, that will be more adventure sports that enables people to have a greater connection with the great outdoors. So the question for me is how can we use data to enable the customer to do more and worry less about having to buy an insurance policy or the pain in when you need to make a claim and that sort of stuff. So yeah, that's my take.
Thanks, David. Now, Steve, do you ever worry that data is not going to be a good thing for your business? You're this hub through which people channel their data and they get good outcomes. Could a more distributed world of data be actually a problem for Confused.com?
I think that depends how agile we are, and we are open to the changes that happen. So if we sit on our hands, then absolutely, but we don't intend to do that. I think to answer your former question, your previous question, I think what data can do is it can enable quicker, easier access to better products that are more flexible at the right price. And I think in that statement, we probably touch on almost all of the different businesses that you see in and around insurance, from comparison businesses to insurers to suppliers and so on. Because I think everyone has a role to play there. But if everyone evolves their business quickly and cleverly, and taking the opportunity of the increased amount of data that's available and doing it in the right way, then that can absolutely happen, and everybody benefits from that.
Mm-hmm. Thanks, Steve. Nigel, you've got in many ways the most radical view of the future of the industry in terms of data and technology. What's your prediction as opposed to wish?
Prediction, I think hopefully is going to be influenced by what we're doing at Peppercorn. But I think
AI is prediction. They are prediction machines. I haven't used any data for this prediction.
So I think making in the context of insurance the purchase experience so much easier than it currently is clearly something central to the use of data, and that could be as simple as, rather than a long list of data entry points, just giving consent, and then bang, you have your insurance quotes. That would be sort of one thing, and that's a little way away, but it's certainly not impossible. and indeed people are striving to do that. But I think really importantly, what data can do, and we haven't necessarily talked too much about this, is make sure it's the right cover with the right, whether it's add-ons or permutations, whether it's excess or driving other vehicles, having the right level of cover at the right time, because that is something which I think data can really help overcome as well. But that is an area which is even further away to be able to read and interpret data to customize and create the right kind of cover level. But ultimately, I think it's going to be fairer for customers and also fairer and more efficient for businesses as well, which in turn, therefore, means if there are lower expenses and a better experience of claims, that means we can offer a better premium. So everybody wins ultimately.
You didn't mention the claims process. Is that going to be much better as well?
Yeah, absolutely. I think that handled more efficiently with more data and more joined up. That's probably one of the hardest ones to crack, because the number of different people involved in a claim, from solicitors through to garages, repairers, salvage, write-off, it's the most complex supply chain. But absolutely, indeed, in the way that we've gone about selecting some of our partners when it comes to claims, we believe we've found a partner that really joins all that together using, not surprisingly, technology and AI primarily to automate a lot of the speedier claims processing, which is actually what customers really, really want. They want a fair outcome, but they want claims handled really, really quickly and to understand what's happening. And indeed, technology is already enabling that.
Thank you, Nigel. Harry, a last radical perspective from you on the future. As you've heard Nigel talk about the right cover at the right time there, I think that probably resonates with you. But how would you predict this is going to evolve very quickly? We're a little bit over time now, so we should stop.
Essentially, looking at it from my perspective as a user, I would predict that sooner or later insurance is going to be priced in. So I rent a car, it's already priced in. But then by providing the appropriate amount of data, if I choose to, I would qualify by proving positive behavior in the sense of risk profile. I would then be eligible for better rates or payback or incentives. So then I would have an incentive to collect this type of data, to present it and to prove it in order to benefit from the less than default overhead cost. And this would be something that all of a sudden I provide my data and I get direct incentivized, and I'm totally sovereign in choosing to do so or not, because if not, I just pay the default rate. And I believe ultimately somebody in the InsurTech is going to come to that. And I believe that has a very strong appeal, because we all know insurance is not something people look forward to. However, saving money or getting something back is something that can be thought of as positively. And if I have to prove to be eligible for this by providing the appropriate transaction history, well, then, okay, I'm probably willing to do that.
Thank you, Harry. A great point to end on. Insurers knowing who you are, what you need, whether you're eligible, and what the best price for you is. It's like a comparison site and an AI and a personalized insurance offering rolled into one. I think we better stop there because we've run a couple of minutes over. I'd like to thank our panelists, Emma Huntington of Admiral Pioneer, David George of BikMo, Sarah Williams-Gardner from Fintech Wales, Nigel Lombard of Peppercorn AI, Steve Dukes of Confused.com, and Dr. Harry Behrens of Daimler. Thank you all very much, and thank you also to our sponsors, Fintech Wales.
Thank you very much, Dominic.
Goodbye from the seven of us.
Thank you for joining us. You can find this discussion on www.futureoffinance.biz and indeed other planned webinars under current events. I am Wendy Gallagher. If you would like more information about how to work with us, please do email on wendy.gallagher@futureoffinance.biz. Thank you once again.